Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate finance. And boy, do we have a doozy for you today. We're diving into Terra Innovatum Global N, V's latest report, which basically tells us how this company has officially become a big deal after merging with GSR the Third Acquisition Corp. It is like a corporate Cinderella story, but with more stock options. Before we get into the nitty-gritty of this merger, if you like getting plain English explanations of complex financial documents, hit that subscribe button, and if you want to chat about these findings and other market plays with fellow enthusiasts, our Discord community link is in the description below. Alright, let's jump right in. The main event here is the completion of a business combination, which is a fancy way of saying Terra Innovatum and GSR3 have officially joined forces. This happened on the 9th of October 2025. Think of it as a corporate wedding, and this report is the marriage certificate. This document is an 8K filing, which means it is reporting a significant event that shareholders need to know about, like this big merger. The company's official name is now Terra Innovatum Global NV. It was originally an Italian company, Terra Opco, which then created another Italian company called New Topco, and that company then changed into this Dutch public limited liability company. So it has been around a bit of a transformation journey before this big merger. The company S stock is now traded on the Nasdaq under the ticker symbol NKLR, their ordinary shares. Basically, the common stock are valued at a very small amount, 0.01 euros per S-share. Terra is considered an emerging growth company. This means they get some breathing room when it comes to following certain financial reporting rules. It is like being a startup with fewer immediate burdens. So what exactly happened in this business combination? Essentially, Terra Opco, the original Italian company, partnered with GSR Third, a special purpose acquisition company, or SPAC. They went through a series of transactions that ultimately led to GSR Third merging into a subsidiary of Terra. And here we are, a new combined entity. This whole process kicked off with a business combination agreement back in April of 2025. Shareholders of GSR Third gave the thumbs up to this deal in October. To make this merger happen smoothly, several parties, including GSR the Third's sponsor, some former directors, and management, signed a registration rights agreement. This agreement basically says when and how they can sell their shares after the merger without causing a market panic. Now, a real crucial part of these mergers is how they get funded. Terra, or rather GSR Third before the merger, secured private investment from accredited investors. This is known as a PIPE financing, which stands for private investment in public equity. They raised about $31.8 million initially, and then another almost $5 million. They sold ordinary shares and warrants, which are like options to buy more shares later, to these investors. Think of it as getting a down payment from big investors before the official merger. Then Terra officially took over all the rights and obligations related to these PIPE agreements. This money is important because it helps fund the company's operations and growth. Before the big merger, Terra Innovatum also had some convertible bridge loans, which are short term loans that can convert into equity. They received about $5 million from that. By October, the principal and interest on these loans were converted into ordinary shares of the company. On top of that, holders of these bridge loans got warrants, giving them the right to buy even more shares at specific prices. This is another way they raised capital and incentivized lenders. This section confirms that yes, the acquisition is complete. The combined company is now operating as Terra Innovatum Global NV. This is a standard part of most filings. It is essentially a disclaimer saying that anything the company says about the future, like their plans or expectations, might not actually happen. They're not responsible if things don't go as planned. It is basically saying, don't sue us if our predictions are wrong. Here, they list a bunch of potential roadblocks. Some of the key ones include the ability to actually implement their business plans after the merger, the risks of operating in a highly competitive industry, the possibility of delays in developing and selling their products, and the risk that they might not become profitable or might need to raise more money later. They also mentioned the risk of not being able to keep their stock listed on the Nasdaq. These are pretty standard risks for any growing company, but it is good they're being upfront about them. The actual business of Terra Innovatum is detailed in the proxy statement, which this report refers to a lot. We're not going to go into that full detail here, but it is important to know they're pointing us to other documents for the nitty-gritty of what the company actually does. Again, they are pointing us to the proxy statement for a deep dive into the risks. This is common practice when a lot of the foundational information has already been provided in related filings. This section is where things get interesting. They're referencing a lot of financial statements that are in the proxy statement. This includes audited financials for GSR Third, Terra OpCo, and the newly formed New Topco. They also mention unaudited financials for GSR the Third and New Topco. This is the juicy stuff for investors looking at the combined entity. This information shows how the two companies would have looked if they were already merged for the 6 months ending the 30th of June 2025 and for the entire year of 2024. It is like a sneak peek at the post-merger financial picture. This is the management's own report card on their financial performance. They discuss the financial health and operating results of both New Topco and GSR the Third. Now let's look at who owns what after this merger. This table shows us who the major players are. Here is where we see the breakdown of who holds the company's ordinary shares. This first column provides the actual number of shares owned. This table lists the owners. We see directors and executive officers of the new company. Alessandro Petruzzi is a major shareholder, holding 25,840,000 Pubco ordinary shares, which is 34.1% of the company. He also co-owns Ning SRL, a holding company. Marco Cherubini also holds 25,840,000 shares, also 34.1%, and is also involved with Ning SRL. Together, these two hold a significant chunk of the company. The sponsor of GSR Third, GSR3 Sponsor LLC, holds 5,934,346 shares, making up 7.8% of the company. It is worth noting that Gus Garcia, Louis Silberman, and Anantha Ramamurthy are managers of the sponsor and may be considered to share beneficial ownership. Ning SRL accounts for a massive 34.1% stake in the company. As we saw with Alessandro Petruzzi and Marco Cherubini, looking at these numbers, it is clear that the original founders and key investors from Terra and the GSR3 sponsor hold a very dominant position in the newly combined company. Alessandro Petruzzi and Marco Cherubini, through Ning SRL, control over a third of the company. This suggests they will have significant influence over the company's direction. The GSR through sponsor also holds a substantial percentage, indicating their continued involvement and potential voting power. This part talks about the management team and the board of directors. They confirm that certain directors are independent, which is important for good corporate governance. Rex Jackson, Michael Howard, and Martha Crawford form the audit committee. Rex Jackson is the chairperson and is considered an audit committee financial expert, meaning he is really good with numbers. This committee oversees the company's financial reporting and audits. Michael Howard chairs the compensation committee, along with Peter Hastings. Their job is to oversee executive pay and compensation plans. Peter Hastings leads this committee, which is responsible for finding and recommending new directors and ensuring good corporate governance practices. Essentially, they keep the board in check and make sure the right people are in the right places. The compensation for directors is outlined in the proxy statement, and similarly, the pay for the executive officers is also detailed in the proxy statement. Interestingly, it mentions that the compensation will be paid in euros, not US dollars, which makes sense given the company's European roots and current operations. This section is always a must-read. It discloses any deals or relationships between the company and its executives or major shareholders. They're pointing us to the proxy statement again for the details. Any ongoing lawsuits or legal issues are also mentioned here, again referring us to the proxy statement for more information. Terra's ordinary shares started trading on the Nasdaq on the 10th of October 2025. As for dividends, it seems the company does plan to pay any cash dividends in the foreseeable future. They intend to reinvest any profits back into the business to fuel growth. This is common for companies in their growth phase, prioritizing expansion over immediate shareholder payouts. Details about the company's various securities are available in the proxy statement. And finally, how directors and officers are protected from certain liabilities is also covered, again with references to the proxy statement. This section confirms that the PIPE investment we talked about earlier involved selling equity securities that were not registered with the Securities and Exchange Commission. This is typical for private placements like this, relying on specific exemptions from registration rules. This is where they talk about the official conversion of the company into a Dutch public limited liability company, Terra Innovatum Global NV. With this conversion, a new set of articles of association came into effect, which basically govern how the company is run and the rights of its shareholders. As part of the merger, or the closing as they call it, the officers and directors of the former GSR III likely resigned, paving the way for the new leadership team of Terra Innovatum Global NV. The company has approved an equity incentive plan. This plan reserves a total of 7,030,094 ordinary shares for employees, directors, and consultants. It is a way to reward and retain talent by giving them a stake in the company's success through stock options or awards. Terra's board has adopted a new code of business conduct and ethics. This is a set of rules and principles that all employees, officers, and directors must follow. It covers things like ethical behavior, conflicts of interest, and compliance with laws. This is a crucial document for maintaining integrity and trust. This confirms that on the 9th of October 2025, Terra and GSR III issued a joint press release announcing the closing of their business combination. This is standard practice to inform the public and investors about major corporate events. This is the table listing all the attached documents and exhibits. It includes financial statements, agreements, and charters that support the information in this report. Among the exhibits, we see the Articles of Association for the Dutch company, which are the foundational rules for the corporation. Here is the form of the bridge warrants, which ties back to those bridge loans we discussed. This is the actual registration rights agreement signed by the company and the parties who received those rights. This exhibit contains that crucial pro forma financial information we mentioned earlier, giving us a look at the combined company's financials as if the merger had already happened. And here is the joint press release announcing the completion of the business combination. Finally, the report is signed by the company's Chief Executive Officer, Alessandro Petruzzi, confirming the accuracy of the information presented. So let's break down what this all means. Terra Innovatum Global NV, through this merger with GSR III, has officially become a publicly traded entity. The key players here, Alessandro Petruzzi and Marco Cherubini, along with the GSR III sponsor, hold a dominant ownership stake, which means they will have a strong hand in guiding the company's future. While the company is considered an emerging growth company and has raised significant capital through private placements and bridge loans, it is clear they are prioritizing growth and reinvestment over immediate profits and dividends. This strategy comes with risks, as they themselves acknowledge, including fierce competition and the potential need for further fundraising. The company's focus appears to be on developing its products and expanding its operations, with the common stock now trading on the Nasdaq. The lack of dividends is typical for a growing company, signaling a long-term outlook. It is a complex maneuver that has effectively transformed Terra from a private Italian entity into a publicly recognized NV, in the Netherlands now listed in the US. What is your take on this merger and Terra's future prospects? Do you think they can navigate the competitive landscape and turn their growth strategy into profitability? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more corporate deconstructions. And don't forget to join our Discord community to keep the conversation going. Thanks for watching, and I'll see you in the next one.